Joining me right now here at the World Economic Forum in Davos, Switzerland, is Cantor Fitzgerald Chairman and CEO Howard Lutnick. Howard, it's great to see you.
Great to see you, Mary.
Thanks so much for being here. Do you agree with all of those assessments?
Unfortunately, I do.
Yeah.
I mean, it's just going to be, but it's not a black swan event, meaning nothing horrible is going to happen. We're just going to creep lower, so that's not terrible. Interest rates going to go higher and stay higher. You know, there's a lot of questioning about, they think they're going to be cuts next year. I think that's just young people who, 14 years we've had low interest rates. That period's over.
Yeah.
We're going to have real interest rates for the rest of, the foreseeable future.
Yeah, and you say real because zero rates is not real, and they've been living with these for 15 years. You're right. I want to look at the spread here, the 10-year and the 30-year Treasury yield this morning. The 2023 Treasury rally picking up momentum yesterday amid signs of slowdown. We're at the 10-year 3.41%. I mean, that's way off of the highs.
Crazy, right? You think about it. So young people who haven't seen rates, they think that the Fed's got a couple more raises and then they're going to cut into the recession. It's just not the way it's going to be. Inflation is here. Labor force is expensive. Housing is expensive. Food is expensive. It's going to stay higher. The cuts are not coming. They're just going to have to put their hands in their pockets, just like you're now, cold, and hands in your pockets. The Fed will not be able to cut. They'll just have to ride it out. No bullets in their gun.
Well, what about trading? I mean, we've had wild trading this past year, but you're looking for a quiet environment. Well,
equities. For sure. I think they're just going to creep lower like you're feeling it now. You know, they bump a little, come back down, bump a little, come back down. Unfortunately, that's kind of boring, but I think in the world of rates and I think in the world of credit, there's going to be huge movements because people think, look, 340 on the 10-year? Really? That means we're going to cut into the 31 trillion deficit? No way.
Yeah.
I just don't see that happening.
I agree. And I can't believe how quickly the conversation changes to, oh, well, we're going up, and then in the second half of the year, maybe the Fed cuts. That would be nuts.
It'd be nuts. So think about the funny statistics we're going to start to see. So used cars went up 50% last year, right, before 2 years ago.
The price.
Right, the price went up 50%. And now they're only up 40%. Right, so CPI is doing better. But really, if you think about that, is the Fed going to cut into up 50 to up 40?
Yeah.
Seriously.
Well, let's face it. The higher rates have definitely created some demand destruction in some sensitive areas, rate-sensitive areas. Look at housing. Housing starts, building permits out in about 20 minutes' time. I spoke with Steve Schwarzman yesterday, Chairman and CEO of Blackstone, and he was going through the real estate market. I want you to hear what he said, and I'll love you to weigh in. Watch.
Office buildings are having a really, really tough time in the United States. Less harsh in Europe, actually, and Asia. But in the United States, 20% vacancies, and that isn't counting the people who aren't coming in. And if we go into a recession or an economic downturn, that number will go up. Single-family houses, as you know, are going down. And the production of new houses is down 19%, and that'll go down in a normal recession to 35%.
So you spoke at a panel here in Davos yesterday called Real Estate a Turning Point. You said office empty buildings need to be converted into residential?
Right, so the best buildings are getting record high rents. So new, beautiful glass buildings, record high rents. But the B and the C buildings, they're not going to draw people, so they're just going to be vacant, meaning when the current tenants move, I don't think anybody's coming back, and they're going to just sit there empty. So local governments, they're going to have to figure out what kind of zoning they want. They're going to figure out how to incent people to turn these back into housing. You remember when lofts came into place, right? Mm-hmm. They converted that old manufacturing from the 50s into lofts. That's what you're going to need to see.
Interesting. It's always a surprise to me when I go down on Wall Street around the New York Stock Exchange. That's all residential right now.
All resi.
Yeah, and you think that's going to happen even in the office buildings uptown?
It's got to happen. It's got to happen because no one's going to move into these buildings. So beautiful buildings,
because
green
they're still
buildings.
working from home?
No. It just, you need to incent your employees to come back. So we're renovating our offices. Why? Because we want them to be beautiful so our employees want to come back.
Yeah.
So I think this is an opportunity for low-income housing, but they got to invest.
Yeah.
And it's tough for the local governments to stop talking green and start talking housing.
Yeah, it's a great point. A lot of green talk this week.
Talk is expensive talk, right? Expensive talk. You want low-income housing? What, you're going to have green low-income housing?
So
Really,
what are you doing on ESG?
Well, you back new buildings, as an example. New buildings that are done correctly get really high rents. They do. They just get high rents. So a LEED certified building, but how are you going to change an old building? You're going to change the windows?
Yeah.
Really? No way.
A lot more to do.
It's just not happening.
Howard, it's great to get your take on all of this. Thanks so much.
Great to
Good to see you. Howard Lutnick joining us this morning. You've been talking a lot with your voice is getting hoarse there.
You talk a lot in Davos.
Yeah.
That's the way it goes.
I know.
This is Davos voice right here. This is it.